Hello. It helps when you turn off the mute button. All right. Welcome, chart watchers, and especially to our Decision Point faithful. Glad to have you with us today on this Monday, January 13th, 2020 show of Decision Point with your hosts, Carl and Erin Swenlin. If you're joining us for the first time today, we welcome you and hope you will become one of those Decision Point faithful. We do air on Mondays at 5 p.m. Eastern, so be sure and sign up and watch us live if you're watching the recording. We'd love to have you live. All right, so how is everything going for you, Dad?
Oh, not too bad, really. The market's still really bullish, isn't it?
Yeah, it's. I have to say, though, I know I read your weekly wrap, which I highly recommend. People go and read. Of course, you do need to be a member of DecisionPoint.com to read it. But, you know, you definitely had a flavor out there that was somewhat bearish. And then I noticed John Murphy just recently published an article, and he's actually quite bearish right now. So I guess you could say that things are a little bit precarious right now.
Yeah, I'll have some. I have two charts that I want to show that will say why I feel I'm very nervous right about now.
Mm-hmm. All righty. So we're going to talk a little bit about our DecisionPoint.com chart list. I'm going to look at a few charts in there that I really found interesting. We're going to have a discussion on sector indexing. This is something we've talked about on our show before, but we think it's really important to hammer it home. So we're going to talk some more about that. We'll give you our thoughts on the SPY. I know, like Carl said, he's got some great charts he wants to show you. If we have time, I'll talk a little bit about the Decision Point diamonds and show you one of them. I have to say I didn't make a recommendation. I can't make those, but I did let everybody know that I had purchased one of my diamonds, and of course, my diamonds do so well until I purchase one. So I will look at a few, probably look at some of the winners, but I might revisit one of the losers that I picked out for myself. So we'll look at that, but there are a lot of great ones in there as well. For our bonus, of course, Carl's grab bag. So I know we have lots that you want to show us, but let's go ahead and get started. I think I'll go ahead and move us right on into the onto our website at decisionpoint.com. And you can see everything, right?
Yes.
Excellent. So of course here, this is our homepage. You can create an ID and password as a free member. We recommend that you do sign up for our free newsletter. Of course, if you want to get the really great stuff, you do need to be a Decision Point member, decisionpoint.com member. We have the Decision Point Alert, and we have the Decision Point Diamonds. So as you can see, you get all of those in an easy place to find them on our website. But what I thought I would look at right now was one of our...
We will have some free content in there eventually.
Yes, because if you scroll down, there we do post some free information. These are from before we started charging, but you can find those. And if you're on our either a member or if you're on our free email list, I will send you notice when we published a free article or something free that you might want to take a look at. In fact, last week I posted, I sent out information on the Wealth Wise Women show because I did co-host that. So I sent a link to that to all of our members at decisionpoint.com. All right, so I wanted to take a quick peek at a few of the charts in our Decision Point Alert chart list. On our website, you will get all of the annotations that Carl has. He's the curator of our chart list. And so when he sees something that you might want to look at, we put these in the Decision Point Alert chart list. And I know you write your weekly wrap straight from this chart list. Am I right?
That's correct.
Yes. So you're seeing exactly what Carl's looking at and all of his annotations. Of course, these are available on StockCharts.com, but they're not curated. You'll have to kind of dig them out from our chart packs, etc. But I want to go over here and look at a chart that I talked about during the Chart Watchers article. I wrote an article about the S&P's 10-day moving average of the high-low differential. This is one of those charts I always forget to look at, and I have to say, looking at the DP chart list that Carl put together, I noticed this chart was one of them. I was perusing through our own chart list, and I found one that I found interesting that I wanted to talk about. So I wrote about it in Chart Watchers. But what I had been looking at was the expansion we were seeing in new highs. But as you can see, already we're starting to see that trickle downward a little bit here. So I'm going to be keeping an eye on that. But you know, you don't want to be making new all-time highs and then see that new highs are beginning to fail. But this is the indicator I like to look at. I find that when you see this indicator bottom, it typically comes when you want it to at the beginning of a rally. Now, unfortunately, we had that bottom and it already started its way up. And already, of course, it's starting to decelerate somewhat. So I'm going to be keeping an eye on this chart, and I will probably add it to my...
Hold on.
Yes.
I wanted to comment on this. And one of the things I see you have, your annotation is showing the expansion, but if you look, you draw a line from the earlier in December across the most recent high bar. It's actually contracting in terms of where the index itself is going, the price index. So I still think there's a certain certain limit to what this can expand to, but I still think that it should be showing higher new highs as the market is going higher. But,
well, certainly when you make all-time highs, you don't want to see any contraction on some of these indicators. So
right, but as you correctly noted, the last 2 days, trading days, it has contracted, and that's not a happy picture.
No, absolutely not. But this is one of those indicators that you might want to, you don't have to add it to your chart list. Again, if you're a member, it's already there for you. But that was one of the ones that was piquing my interest that I wanted to talk about. And so I thought I would kind of rehash what I was seeing as far as this chart, because it is starting to change from when I wrote just last Friday.
Right.
All right, I'm going to hand the screen over to you. I know you had a couple of charts. We were going to talk about the sector indexing, the sector funds, the ETF indexing.
Right. Before I get into that, I'd like to look at some couple charts here that will show you why I'm kind of negative on the market in spite of how bullish it continues to act. But notice here that we've got a declining tops on the stocks greater than their 20 EMA. And this doesn't always happen before tops, but when it does happen, you should be looking out. See, now note here, we've got a nice contraction on the stocks above their 20. Same with the stocks above 50. Most of the time, you get no contraction on the 200. But if you look back at this major top, that was before the cyclical bear market we had, but really a grand contraction on all three of these indicators. But again, here's at this top, this parabolic stood powerful. It just stocks stayed up there till the parabolic broke, and then the market broke down. But as you see across here, this is not a good situation is to have this weakness showing up. I think it's probably about 25% lower. And we haven't updated yet. Let me just try to update and see if we have updated yet, see what it turned out. No, it's not going to be till later.
Yeah, it'll be interesting to see if we get it moving higher, but we want to see, we certainly will want to see those readings move up based on the the market action today for sure.
This is a really excellent indicator in my mind. I mean, it took me years to realize it, but it's really a direct read on stocks that are strong and stocks that are weak, and it's just you can't get much better than this indication.
Yep, it's very straightforward. And if you just think about a chart, if you're looking at a stock, when the price goes below the 20-day EMA, generally not a play. You're generally going to be considering selling it anyway. And if you get a price drop below the 50-day EMA, you're really in trouble then. So
Yeah, that's
at least 3/4 we're seeing above, but on the 50-day EMA, but still, 1 out of 4 is below its 50-day EMA.
right. Here's the Golden Cross and Silver Cross indexes. They are up to date as of today. And of course, today's move, it's turned it back up again and back up again above the signal line. The main reason I wanted to show you this is that the angle of ascent on this rising trend here is demonstrated, is about the same as what we now. I always want the arrow to be active first. You got the same angle of ascent right now as you had on the parabolic just before it broke. So not a pretty picture, but all these other important tops are not as steep as this one.
Yeah, at least this rally is a little less parabolic, but it doesn't seem to matter much when you look at those other two where we got the failure.
Right. And one of the things I wanted to cover, you mentioned it in the intro there, but we were talking about how indexing is causing a bubble. People, we have SPY, we have a ton of mutual funds out there, loaded, no loaded, all based on the S&P 500. And when then somebody buys a share of the SPY, they're buying all 500 stocks. And the complaint that I had before was that this is giving sponsorship to stocks that don't deserve sponsorship. But then I got to thinking about it over a couple of weeks, and I thought, no, the problem is all the stocks are being sponsored, and maybe they don't need to be sponsored. There's not any selection going on. It's just every stock in the S&P 500 is getting bought, and that's just not a healthy situation. Let's see, this is the list of the 11 S&P 500 sectors. And I wanted to demonstrate the monolithic nature of the trends on these sectors. Let's see, I want to look at candle glance. Okay, here we are. Notice that just pretty much all of them look the same. I mean, except energy and real estate has kind of departed from the general trend there. So, and it's starting to come back, as you can see here today. But I really wish that there's some more diversity here, but you don't find it. I started a chart list actually back in the old days at DecisionPoint.com, and called the ETF tracker, and I've got 100 ETFs in there that, let me see if I can just find it here. And I'm going to make this public so that it's something, so something you can work out of. It's keep 100, around 100 ETFs in here. Let me just let me go to the summary.
Yeah, I will be taking this chart list and I'm going to add it to the free chart packs that you can get on StockCharts.com, the DecisionPoint one. So it's not in there just yet, but I'm going to add it, and I will certainly let all of our subscribers know, as well as the free email list folks, when it's up and ready.
Okay, and just a brief review here, but I've got the major indexes to begin with, and then we have some bonds, interest rates, and then we go into sectors. And I don't know, maybe there are 60, 70 sectors that have some diversity to them. And then let's see, we've got I've got commodities mixed in there because they are a different sector. And then we have the currencies, and then global markets. But it's I think it's a good list to work with, and you can. I got on slow scroll here, and I like to do this, sort it by daily change, and I got some charts. Is okay? I go with those.
Do.
Okay. Let's go back here. Here's one I picked up. Sugar. Now, this is an ETN, and that's different. So if you ever got interested in this, that you would need to know that these are not, say, safe. And maybe that's the wrong word too, but they're different. But they kind of serve a purpose. But this is, you can see it's very not traded very much, no volume on it. But let's just go to the weekly and see how it's starting to show some activity. We've got a long-term double bottom here, and that, to me, that's the kind of thing I like to see. I like to go after the ones that are beaten down. If I'm going to track, I'll probably bet on the 50-to-1 horse. And then you can see the longer term chart, the same setup there. And let's see, we have natural gas. I've been watching it, and it's in the toilet right now, and it's going to stay there a while, and showing a little activity, but it's been trending down. And if you think about on your utility bill, chances are your natural gas bill is the lowest of the water and electrical and natural gas, I should say.
Look at that move. I know, gosh, I know I was buying in and out of it. I think you were at 1.2 UNG, but I learned my lesson. I just,
Right.
it was, it just never acted the way it was supposed to.
Yeah, it's really, and I don't, with the way things are running in the oil market and those kind of resources, I don't see anything turning around on this anytime soon. But so I have UNG, which is the ETF, but there's also, we do have the continuous contract for natural gas, and you get a longer term look because the ETFs don't have that long term view. But we are pretty much down at the bottom, and ultimately it's going to come back, but you know, who knows when.
Yeah, with that PMO, not too soon.
These are charts I picked off of that ETF tracker list, and I just found out there were some interesting charts on there. Here's the software. What I notice in here is it's starting to move vertical, and that's just you know, it can't last forever.
Wow.
And it's even worse on this. The monthly chart is where you get the best view, and maybe it doesn't start at, you know, parabolics don't start to appear except on the monthly chart. But when they're showing up on the weekly or even the daily, then it's probably a shorter term phenomena. But you can, you know, I won't say you can bet 100% on it, but chances are good that it's going to have a pullback of a substantial amount. Here's another interesting, rare earths, and obviously taking off, looking really excellent, and you go out. And here's, not sure if we want to count this as a long-term double bottom or not. You can see there was a fake out breakout here, but now this is even a more shallow bottom, and chances are this is my guess is it's going to be heading higher. And I always look at the monthly. I think there's no, I didn't get a continuous contract on that one.
Yeah, I am seeing the price bumping above some of those really long-term moving averages too that we haven't seen in a while.
Right. And this is one I like to keep an eye on because of the mess that real estate has caused in many people's lives over the last 20 years. But home builders, it's
Yeah,
looking
a buy
like
signal though, and it's breaking out maybe from that.
maybe, yeah, but this is a consolidation right here. Maybe it's saucer, but saucers really come at bottoms, not at tops. So I wouldn't go for that. But let's look at the weekly. Okay, there you got a top right about the same height. So you've got long-term resistance right there. The this is a monthly, I'm sorry, it's a weekly chart, and the weekly PMO is turned down. It's kind of trying to turn up right here.
Yeah.
So, but,
if it can hold a breakout out of that trading range, that could be interesting. At least on the daily chart, it especially looks interesting. A little less so on the weekly, but.
So I could pass it back to you if you have.
All right. Let's see. What was I going to show? You know, since you were talking, actually, I'm going to kind of move a little off the agenda a little bit. But since you were talking about how you like to get those beat down stocks, I do run a scan that I sat down with Carl and we put together, and it does come up with a lot of the beat down stocks. And so a lot of times when I'm looking for diamonds, I will pull these up and you get kind of a feel for what might be going on. And really, I find some pretty good diamonds there. So since there's only 5, I thought we could look at maybe 1 or 2. Is that all right?
Sure.
Oh, I don't want to do that. I'm going to put it in. So I have a chart list called Scan Dump. So anytime I run a scan, I dump stuff in there, and I know that it is completely going to be changing all the time. So if I like a chart in here, I have to save it somewhere else because I know I'm going to take it out the next time I get a scan result. So here's Marathon Petroleum. It's in the energy space. You can see the double bottom that looks like it's forming right now, which is interesting, I would have to say. The PMO's turned up. We don't quite have the crossover yet, but I do notice those slightly rising bottoms matching with the PMO bottoms. OBV, I would like to see these two bottoms rising instead of falling while we've got rising price bottoms. But that looks kind of,
I don't think that's too significant.
yeah. Let's look at Kiwi financial space, another double bottom today. Actually, Friday it broke out, and I would be a little leery of this one just because, you know, it traveled so high intraday, but ended up closing below its open. It's still holding above, you know, what happened Friday, but I'm never happy seeing those tails or shooting stars, kind of what that's the candlestick pattern that we're talking about. But look at the OBV bottoms, a lot different looking. You know, you've got the two rising bottoms pretty clear. These are a little bit rising, but, you know, mostly flat.
That's a positive divergence for sure.
Yeah. So I like that one, but here's what'll happen with the beat down ones, and we'll see if this is a good example. The weekly charts tend to look pretty stinky because it's beat down. So of course, you're going to see that kind of a movement on the PMO. So you have to be aware of that. That's when I start to look at where these averages are. And again, if you're looking for a less than, you know, if you want a longer term investment, you know, you can look also in the monthly charts. This one doesn't look too bad, kind of overbought, but whenever we have only a little bit of information on the PMO, I kind of, I don't know, take it with a grain of salt per se. Nice rounded bottom on this one. It's just now closed for the first time since the drop above that 20-day EMA. You've got the PMO buy signal coming in. Look at the OBV making that nice move to the upside. And even the scooter is starting to make a turn. And the StockCharts technical rank tells you that there's relative strength and internal strength. In this case, not so much relative strength because you've got a low reading, but it is starting to improve. And that tells you that as far as internal strength goes, the intermediate and long-term are starting to look more positive. This one I would have to watch for that 50-day EMA. It'd be really interesting to see if it can get above these two longer-term ones, but that's actually not a bad setup on the daily. And quickly look at the weekly, and then we can wrap things up. Weekly chart on this one, not too bad considering how, you know, what I see is this possible trading range and a price is at the bottom of it right now. So that would be the target, would be right around 1150.
Crude had a bad day today, so I'm not sure how that's going to work out, but the energy sector has been showing promise.
Yep. This one's in utilities. And I did notice today when I was looking, and again, we only have a few more seconds, but when I was looking at the sector scoreboard, I'll make it right here, sector summary. I did notice, you know, we were seeing utilities were coming to life a little bit. Materials, technology, those were all our leaders today. And that's kind of a smattering of, you know, defensive and more aggressive areas of the market. So it's kind of a mixing around here. And energy, of course, was up, but not very much. All right. Well, I think it's time for us to say goodbye. And I appreciate everybody joining Carl and I for the DecisionPoint show. We do air on Mondays at 5 p.m. Eastern. So we do hope you'll join us again next week. Happy trading.